Hello, everybody. Welcome back to SEC Roundup. I'm Nick Morgan, the co-founder of ICAN, Investor Choice Advocates Network, and the co-host of today's episode of SEC Roundup. I'm joined by our frequent co-host and ICAN advisory board member, Jennifer Schulp, who is the director of financial regulatory studies at Cato. Jennifer, thank you for co-hosting today.
Happy to be here.
We are always joined, and we're happy to have you as always. Joined by Howard Lindzon, who, as most of you will know, is the founder and CEO of Stocktwits, also the founder and general partner of Social Leverage. Howard, thank you for coming on.
Can't wait. Let's do it.
Let's do it. So the reason we're talking to you today, Howard, is a topic we visited on the pod before, which is regulators' desire to do something whenever retail traders get excited about meme stocks. Jennifer and I have talked about this before. Jennifer has actually addressed it in her book, the topic of sort of speculation in general in the markets and the desire by regulators to do something about meme stocks. Jennifer, can you give us a little bit of context? Tell us a little bit about the regulatory perceptions around meme stocks and what's likely to happen, or not likely to happen, but what has happened in the past around this topic.
Yeah, happy to do so. And let me kind of start with the gloss on what exactly we're talking about when we're talking about meme stocks, because the definition's a bit malleable. And it generally refers to a company's stock that's driven by some sort of social media hype or something else rather than the particular financial performance of the company. What's important is that meme stock investment is driven by retail, i.e. individual or regular people investors. And meme stocks can be volatile. They can be subject to quickly changing sentiment. But so-called meme stocks have also found committed retail investor bases who've supported the company over longer periods. This whole concept started with GameStop and AMC back in 2021. Today, we add kind of Kohl's and Krispy Kreme to the list. But the idea of the meme stock is kind of expanded quite a bit. And it's a term that people throw around anytime somebody believes a stock's value is being driven by something other than profits, or a stock that someone might feel is overvalued. So you can add to that list crypto treasury companies, Tesla, and a whole bunch of other types of companies. A lot of ink has been spilled about meme stocks, and a lot of policymaker airtime has been dedicated to discussing this phenomenon. So why is that? There's been a number of concerns voiced, but I'm going to focus on a few that fall into a couple of categories. And we'll start with number one. I say meme stocks are just speculation, and speculation is bad. And say, as Nick's pointed out, I've written about this before. You've probably heard me rant about this before. So I'll continue on without the full rant. But variation on this theme is that meme stocks blur the lines between investment and entertainment. I think that's problematic because who says investing shouldn't be fun? And investing for something other than a pure profit motive is hardly new. Does anyone remember buying Disney stocks when the certificate was a keepsake? Another variation on that theme is that meme stocks are divorced from a company's, quote, fundamental valuation, and that in theory would harm a company because its stock price might not relate to its earnings. I could go on and on about how all of these concerns are wrong, overblown, ill-conceived. I've written a ton about this. I'm sure we're going to talk more about it. So let's just move on to the next kind of policymaker concern. The next concern is that meme stocks are subject to extreme volatility, and that means that some investors are likely to get hurt. The general idea is that if the collective enthusiasm for a stock wanes, the stock price will fall, and it will result in significant losses for people who bought at the peak. Again, this isn't a concern that's particularly new when it comes to investing. It's just a concern about risk-taking by investors. And the solutions that could be proposed to this largely step on an investor's ability to make their own decisions and to take their own risk. And kind of the third area that there's been focus on is the idea that meme stocks are vulnerable to market manipulation because we're dealing in the social media space. Anyone can say anything and manipulate the market. This concern also, though, generally ignores existing rules that prohibit market manipulations and that there are mechanisms for dealing with manipulative activity in the markets. These three categories of concerns we hear time and time again. We've seen policymakers make proposals about dealing with meme stocks, though, that have tended to be, say, with a few exceptions, they've tended to tread relatively carefully in looking at regulatory solutions for what people view as a meme stock problem. I challenge whether it's a problem at all, but the solution like market mechanics. The move to T+1 settlement was seen as a solution to allow the market to function more smoothly during a meme stock or other retail craze. Proposals have focused on the resiliency of broker-dealers and other market participants in confronting potentially volatile retail markets. And we've had focus in this space also looking at kind of traditional concepts of market manipulation. It doesn't mean that there aren't more dramatic proposals out there, but I think it kind of focuses on the fact that it's really difficult to think about a good way to regulate in this space because A, it's not clear that the problems are actually problems and that you're not making more problems by trying to control how people do their investing and for what reasons.
Well, that's a lot. Thank you for that recap, Jennifer. Howard, I will ask you to react to that in a minute, but before we do that, for our listeners who might not know you, can you tell us a little bit about Stocktwits and social leverage and how you came to do what you do?
Thanks. Yeah, that was a good recap. I'm Howard. I'm born in Toronto, live in San Diego and Arizona. I'm almost 60. And I get fascinated by the language of the markets. That's what it is. It's beautiful, dancing, mystical game. Everybody playing everybody in a multiplayer way. And the game's changing, obviously, because, that's why all this speculation is causing so much hair pulling. And let's see, I'm an entrepreneur, started a company called Stocktwits, which is probably the largest social network for traders and investors by 10 million signups. It's, million monthly active, logged in people that love the markets. It's an incredible source of fun and sentiment and zany characters. And also the founder of Social Leverage, which is an early stage seed investment company, diverse investment, mostly financial services like Robinhood, First Investor, eToro, Alpaca, which is going to be a huge company, which is kind of a modern Apex, and diverse is Manscaped, a male grooming product, below the belt, as they would say. Ball shaving for people that have the stomach for it, the safe ball shaving. And I love the idea of what social networks, they're not really social networks, but what network effects have done for educating, onboarding hundreds of millions of people around the world, which is obviously leading to all this confusion and hair pulling.
Right. Well, from your perch as one of the co-founders of Stocktwits and CEO, that's we see a lot of the enthusiasm around some of the meme stocks take place on that platform. I'm sure you have thoughts, reactions to the ideas that Jennifer just recapped. So what do you think about attempts to regulate the reasons why people might be interested in a meme stock?
Yeah, I mean, it's the ultimate question of the day. History is the guy here. So I'm fascinated by Westerns, that's American history. The West was settled. People were warned that Indians and snakes and bad people were waiting for them in the mountain ranges, and they still picked a guide to just, they were speculating for a better life on the other side. And that's what America, that was the frontier. And we're just in this, that's it, history. And for them, it was their life. The speculation that's happening right now in the markets obviously has led to, certainly some casualties, but it's a different type of frontiering, right? You have this unbelievable digitization of the world, and no one wanted it, or the people in power did not want it, and it's winning. The ultimate meme is Bitcoin. It is software, right? There's no doubt that it's software, but it's still a meme because the people that wrote the value books or how to value markets call it rat poison. So obviously just right there is confrontation. Like Warren Buffett and Ben Graham are disgusted by a meme. Right. So it's the ultimate confrontation. So of course, regular people and government's going to be battling this out because you're throwing out the textbooks in many ways, and no one likes to throw out the textbooks. People like to keep reprinting them and then changing 2 words and charging the next students the exact same for the same book. So not to be that cynical, but like, I believe in buyer beware. I think we have to start treating 18-year-olds as adults that can carry guns. They can't drink. So it's all screwed up there. But buyer beware. If you enter the markets, it's like ultimate fighting. You are going to get cut. You are going to get grifted. There are people out to get your money. If you do not know that, well, you're the sucker in the room. You are the person crossing the Rockies in November. And that's crazy. And so I don't think you can protect those people. They're just in a world that of this many choices and this much freedom. I just don't think we can protect those people. What we can do is mentor them, educate them, teach them the language, warn them like we do signs on the road. And you know what? If they get burned, that's a good way to learn. Again, am I against fraud? Absolutely. Like the conflicts are so incredible, from the White House launching crypto coins, terrible. It's obvious front running to, Gensler, who was a nightmare in many ways. Again, like I'm too small to worry about it, but like, how did Trump SPAC go? I mean, the history of certain people doing financial products that got approved by Gensler, who was like the toughest on the SEC. So there's just conflicts everywhere. And I think people just need to know that, and they better buyer beware. But at the same time, what's happening right now will lead to more regulation, unfortunately, because it's just, what happens at the end of these crazy runs is people complain. So I don't know how it all plays out, but I'm all for speculation. I think America's a speculative country. I think it's what truly makes America interesting. And I think speculation is a beautiful thing. It's an art and a skill, and it has to be taught and it has to be respected. And if you don't respect it, you're gonna get run over.
Yeah. I have, is Stocktwits and other platforms like that, is that a source of sort of crowdsourced policing of bad ideas? I mean, how quickly does the notion that XYZ stock has problems, how quickly does that surface on a platform like Stocktwits?
Every now and then, everybody uses Stocktwits differently. So I use it not to hang out all day. I use it to journal my ideas and track them and see, other people's ideas. So again, you come into any network, people expect nirvana, and no, you've got to, like, it's like a garden in your front lawn. Like, you get what you put into the ground and how you tend to it. So I think they're just not what people think they are. There's a lot of false advertising and thinking about this. But what you get, we tried to not be police, but I've been called the police. We tried to, not let people abuse one another. And we have certain ground rules, and they're pretty simple. It's like, hey, listen, have some fun. You can swear. But as soon as you attack other people, I mean, that's where we draw the line, right? So I don't know. I believe there should be rules. I don't think they're perfect. And that's still part of free speech, is having rules. So I think, free speech is more tortured than the SEC. Free speech has been abused more than the idea of, the SEC and meme coins. So we believe in free speech, but we also believe that there should be rules. And so do we catch everybody? No. But, when you get a certain amount of people hovering around ideas, there's signal that develops. Now in Vegas, they also have negative signals. There's certain people that walk in the casino, and the casino owners know they're going to lose, which is just as much signal as the good players, right? So, everybody looks at signal differently. I think it's just one source of information. I think fundamentals matter. I think price and volume matters. I think sentiment matters. But mostly it's behavior, and you've got to manage your own behavior. And like I said, if you come into non-understanding those things, you're going to learn them or you're going to get killed.
Right.
Fight Club.
I think I know the answer to this question, but I'll ask you anyway. And Jennifer alluded to this. Is there something wrong with trading securities being fun?
No, I'm all about it because I believe in indexing. I got old enough where I believe in direct indexing and indexing. So I think it's hard for me to eat, like, as much as I know every investment will be flawed at some point, I can't find the flaw in indexing for the world that we live in today.
Yeah.
Right? Assuming other things being equal and then like profits mattering long term.
Right.
I just don't understand why people don't index and therefore direct index. Now you can pick different actors. Now around the edges, if you do not learn to trade, you are also giving up one of the greatest freedoms that America has to offer, which is battling the whole world every day without, physically battling people every day. So I think you can't, that's why it's so popular. It's ultimate fighting for people who don't want to get bloody noses.
I think we have the title for the episode. And
That could be why Jewish people like me like it. We're scared to get into the ring.
you like to get the bloody nose to get the fight on.
Yeah. Let's quickly. Let's go back to E-Trade, 1999, the E-Trade baby, and the Ameritrade and the yachts. Like, what are we're just revisiting stupid history. There will never be any, what Robinhood was getting, we wanted to throw Vlad in jail for confetti and for a perfectly designed option button that everybody happened to push at the same time. I don't know, off with their heads. I get it. They screwed up. We'll never know the true story, but like 1999, do we remember the TD Ameritrade commercials and the E-Trade commercials and the yachts and the parties and the flamboyance of like what advertising was?
Right.
And CNBC and the suitcase indicator, and the world was one pipe. We were watching what's his name get out of a truck, one of the limo with a suitcase, and everybody was speculating what the Fed was going to do, and we all had to watch the exact same thing. But that was broken too. That was a one pipe world, and now we're in just pick your pipe.
Right.
I call it a post real time world. Like, we got what we wanted, is like we're all there on the goal line watching, and then we realized that the algos, Elon and all the other people, up real time. They decided to tell you what real time was. So now we live in a post real time, right? Which I talk about, which is the fact that if you think you're seeing it in real time, you're getting lied to. And so you better off waiting for communities that actually dissect the news that you can trust and be a minute or 2 or 3 late, because you're going to get better signal. Right. So I think this is what's fascinating about retail. There's so many ways for a retail investor now. In 1999, you were on Yahoo Finance and you were 20 minutes delayed, and we thought that was nirvana.
Right.
We literally were like, what? We were looking at prices that were 20 minutes delayed, and we thought that was fair, right? And now, I actually believe that it's better to be 2 minutes behind real time, because you're going to get better signal, because everybody got what they wanted for, which was real time.
Yeah.
That's why you have retail. You went from 20 minutes delayed at Yahoo Finance to Twitter to, TikTok, where everything's happening and the president can tweet and the most influential bankers can tweet, and, there's no rules. It's ultimate fighting at the line of scrimmage. Therefore, why would you be at the line of scrimmage? So of course retail's interested, because the rules have changed.
Right. Well, I don't want to oversimplify, but I heard this is ultimate fighting. This is some signal creation and use, and it's one of the greatest freedoms available to us. So why don't we do it?
Yeah.
Maybe we'll leave it there. Howard, thank you for joining us. Jennifer, thank you for co-hosting. For everybody else, if you want more information about ICAN, go to icanlaw.org, and we'll see you on the next SEC Roundup. Thank you both.
Thank you.
Thank you.